To day 2 of the Tough Tech Summit. We are at the Proterra case study. So we have with us Ryan Popple, Executive Director and former CEO of Proterra, as well as 2 investors in the company, Andrew Beebe, Managing Director over at Obvious Ventures, as well as Lila Preston, Co-Head Growth Equity Strategy over at Generation Investment Management, where both invest in clean tech companies. So perhaps you've heard of Proterra before. It is an electric bus company with over 500 buses out there on the road right now, largely via partnership with US transit agencies. The idea is that electric buses can be quieter, cleaner than our current diesel-fueled alternatives. And the company has raised some $770 million on the idea from investors, including Daimler, B&W Ventures, Kleiner Perkins, as well as our 2 aforementioned investors. So thank you so much to the 3 of you for being with us today. The first question I want to start off with, and what some people might not know, is Proterra has actually been around for a while. The company did recently raise a pretty big round earlier this year, but the company's been around since around 2004, so well before the clean tech boom and bust around the 2008 era. So what would be really interesting to hear, Ryan, is tell us a little about how did Proterra navigate that period as a clean tech company, and how has it evolved its strategy as a result of that?
Yeah, thanks. The company started out early on really focused on the needs of a few individual customers that were trying to move towards zero-emission vehicle technology. There weren't nearly as many programs that were clean tech specific. There weren't incentives focused on clean tech or even alternative energy, but there was a recovery program, a Recovery Act program that was funded out of the Great Recession, and that actually provided some of the initial funding for hydrogen fuel cell and battery electric vehicles going into the fleet vehicle market. So in some ways, it's an example of kind of out of the ashes of an economic challenge. We can build back better, we can build back more effectively, we can build back green, and not necessarily have to rely on any sort of special programs for sustainability. And that's really what got Proterra going through its first probably 6 deployments. It was customer specific subsidies and funding, and the customers were able to buy exactly what they wanted. And in the case of Proterra, what they wanted is they wanted someone to develop for them a completely zero emission transit vehicle.
Great. So let's turn to the investing side of things. Obvious Ventures, Andrew, invested around 2016 in the company. So that was well within the time when clean tech was still being questioned and considered. So what made you invest in Proterra at the time? What did you see that you thought this company can go up against at a time when electric vehicles aren't hugely popular? There are also Chinese companies that are making buses already that are electrified. So tell us a little more about that.
Yeah, thanks, Lucinda. Thanks to the whole Tough Tech team and the Engine folks. We're huge fans and really happy to be here. The origin story for us is pretty straightforward. At Obvious, we tend to invest early and back purpose-driven founders trying to reimagine trillion-dollar industries. And sometimes that leads to contrarian points of view. We had just completed a pretty deep dive on the electric vehicle space and had a strong thesis that we were at the very early ramp of a true transformation of all mobility on the road, in the air, and everywhere. And we had, in fact, I think we probably talked to 20 different companies, and Proterra was one of the last. And in Proterra, we saw that purpose-driven, truly incredible leader in Ryan, and a company that was targeting a somewhat sleepy market at first, but recognizing that if you could transform that and own some reasonable share of it, you were about to become part of something massive.
Which is also very interesting from the point of Lila. So Lila, you over at Generation had actually seen Proterra pretty early on. You saw it in 2011, knew about the company, but did not invest then until 2017, about a year after Andrew went in. So why didn't you make the leap in 2011, and kind of what changed operationally at Proterra that made you think now is the time?
Yeah, it's really an interesting journey, because this company, as Ryan said, has been around, had kind of an early start, some tailwinds, some headwinds, and then post kind of the economic crisis. We were monitoring it because we had been doing our roadmap research, which is our long-term industry analysis. We do roadmaps across, all pockets of the market related to how do we transition to a more sustainable economy. Energy and mobility has been one of the core coverage areas for us. And in that road mapping, our kind of EV landscaping, probably around 2015, 2016, not dissimilar from where Obvious was arriving, was to say that the cost down curves were in favor of a really attractive ROI for the owner operators, and that actually this could penetrate a very big market with superior value proposition. Again, zero emission, ultimately, efficient, safe, and the whole system benefits. We always think about this in terms of like system positive solutions. And so Proterra was kind of making progress, building a pipeline of sales to cities. And what we had to see was that it was diversified enough that there was actually an underpinning of not just 10 cities or 30 cities, but getting into a deep set of buyers who would actually place repeat orders. And there was something attractive about that business model, actually quite dissimilar from the auto OEM and the personal vehicle, which is highly competitive, and the channels to market are very controlled. And there's kind of one-off sales model. There was a repeatability in the city transit sales channel that we liked. And then the second piece was the Proterra Powered proposition, which is really coming into fruition today. But this kind of the engineering and technical excellence that had been built in Proterra early days, and then I'd say like under Ryan's leadership, really doubling down on an advantaged, battery licensing platform that can now be leveraged into a lot of different markets. So kind of the two pillar of a core repeatable sales model with a positive ROI, and then the upside from this Proterra Powered proposition to start leveraging the drivetrain know-how that was in this company. And again, we're later stage capital. We're sort of a growth expansion stage, so a little bit after where the obvious has come in, but a really nice complement in this kind of continuum and being mission driven and supporting, operators and CEOs, like Ryan through that stage. So we actually did a Future of Mobility Summit in 2016. I think your VP of Government Relations attended that, and that crystallized against the backdrop of the roadmap work, our kind of movement to say this is the right time for generation to jump in, and we've been, big supporters since.
That's great. So you bring up a huge and really interesting point about repeatability. So a lot of Proterra's model and repeatability has been focused on these local governments about transportation, which living in New York, I know very painfully well, transportation systems are very, very slow to change. So the question is, how, Ryan, have you tackled the idea of getting some of these governments to start taking on electric buses versus what they currently have? What is the value proposition that you're telling them? This is why you need to make that switch now.
It's a great question. I mean, it's a very broad and diverse market, so you can't necessarily generalize about a particular type of customer. What we have found is small and medium-sized cities, though, have generally moved faster and have been kind of the case studies where you prove out the economic return that Lila was mentioning, as well as the superior user experience in terms of a quieter vehicle, zero local pollution. So what we've often looked for is fleets and cities that are very brand conscious, that are interested in making a statement with how they provide the service of mobility within their community. We've been pleasantly surprised that the largest cities and largest states have moved, frankly, faster than we expected, because our initial plan was actually to focus on kind of the long tail of the market, where the decision cycle was a little bit faster and where there was a little bit more freedom to be innovative. But what we found is as the economic use case proved out, and the tailpipe benefits are obvious, there's no local emissions, and then some third-party validated studies came out about life cycle emissions in terms of greenhouse gases. That really caused larger state fleets and larger city fleets to jump in as well. But it definitely started with I would say the small and medium-sized fleets first. The very first Proterra deployments were in places like Foothill Transit in California, San Antonio, Texas, Reno, Nevada. It wasn't necessarily in Los Angeles or Las Vegas, for example.
Right. I mean, the company actually moved, I think your first factory was in South Carolina, which is interesting. We're talking about, well, now you're in Burlingame, but one of the first factories was in South Carolina. And so was that decision predicated on the idea that you'd be closer to these governments that are a little more flexible, a little more willing to take on transportation changes?
Well, the first and main facility is in Greenville, South Carolina. The majority of our headcounts are there. That facility, I think, originally was positioned there primarily based on supply side decisions, in that South Carolina is a phenomenal location for manufacturing anything in the automotive or aerospace sector. So it's just a very robust supply chain, great workforce, very livable area, rapidly growing area. So when we were looking at where should the factory be to serve basically the eastern United States, Greenville, South Carolina ended up being a perfect choice. And we're probably in the same automotive corridor as Daimler, BMW, a number of other suppliers in that region. The second factory ended up going into LA County, and then our first battery production line is in the Bay Area, and our second battery production line is in LA County. So we've gradually been building out manufacturing locations to cover the physical size of the market. Buses are big, batteries are big, and you've got to be able to handle service. So you need to have some facilities that are reasonably proximate to most of your major bus fleets.
Right, and so I'm going to skip a little to part of the question that I asked earlier, but also as we're talking about manufacturing. So Andrew, you did invest in 2016. There were Chinese bus players in that field then, and so what was the thinking behind, Proterra has a chance at beating them potentially? I'm guessing that's why you invested in the first place, but they have a potential of dominating.
Yeah, I think, two things. One, we call it the 4 T's, but team, timing, tech, and TAM. And in particular, at the early stage, we look a lot at team and TAM. So the quality of the team and the size of the opportunity. And then we look at how might they become an industry leader. And as I said earlier, we saw in this team something really special, and we saw them first with buses and then Proterra Power going after an absolutely massive TAM. But uniquely in my role, at least, I had just spent over a decade working in the global supply chain of solar panels and solar modules, and thinking through how Chinese players, and one of whom I worked for, played a critical role in bringing down the costs and expanding opportunity. That company and the work we did in solar worked really well because it was a very simple product that had almost an industry standard production profile. Buses are different. Electric buses and electric vehicles at the time and even today remain really tied to leadership in technology and having leadership in quality, leadership in production techniques, et cetera. And what we saw with Proterra's early production was that they were leaps and bounds ahead of other companies, not just BYD, but others around the world, who, even though some of them had great volume production and had produced really high quality other things, were not matching the quality that Proterra could offer. So we saw that as a multi-year advantage, and I think that's played out over the last 5 years pretty well.
Interesting. So other part of being a huge TAM and scaling a company of the size of Proterra that is trying to do with a lot of hardware as well is it's going to be hard. There's going to be issues. So
yeah, well,
Ryan,
I think the tech and the timing piece, you can't always, you can really get to know people and make team decisions. You can study TAMs and make your own projections. Tech and timing are sometimes challenging. In this case, we took a bet that the government regulations and the tailwinds with regard to wanting a better product in the market from a safety standpoint, an air quality standpoint, we're going to win on timing. And then we looked closely at the tech and we made a bet there that they also had a real advantage on tech. And I think that has really borne fruit, turned out to be correct.
Yeah, Andrew, I think the last time we spoke, you did mention kind of Ryan came in 2014 to become CEO of Proterra. So at the time Ryan came in, he had to put out some fires. So what were those fires, Ryan? And then how did that impact the strategy in the long term, right? How did you think about what the company was going to become after that?
Well, I'd say rapid growth is hard in any industry. So your growth, just by definition, means you're doing new things. And new means there's not necessarily a process. There isn't necessarily someone who has already learned the hard way or the easy way to do something. So everything is novel and challenging. There's a lot of opportunities to get things wrong before you get them right. So I don't necessarily think that's even unique to hardware. I think the faster you're growing, the more likely you are going to make some sort of mistake, and you need to be resilient for it. I would say initially, I thought the main challenge was getting the production rate paired to the level of quality that we needed to hit. And the challenge with that is you kind of chip away at a new market. And as Andrew was saying, you think about TAM and timing, and you have your forecasts and you lay in your capital planning and you put in your hiring plan. But then the market ends up breaking free faster than you expected. So most of the time you're impatiently waiting for the market to turn. When it does turn, though, it doesn't turn to the rate that you predicted. So it's the market's either adopting your product too slowly or too quickly. It's never really kind of Goldilocks right in the middle. And so one of the first challenges was to figure out how to put in the discipline to not build as fast as the market was pulling, to ensure that we were putting the right systems in place to maintain quality. And then the next challenge we hit was really going from kind of that classic minimum viable product to a mass market product. And for Proterra and for fleet electric vehicles, that had a lot to do with battery technology and with charging. There are a lot of routes that electric vehicles can do that are relatively short haul routes. But when we talk to fleet operators and we try to get a sense of what it would take for them to use an electric vehicle on all of their routes, what we found is we had to design the batteries in terms of range and the charging systems in terms of power level to be able to do the last 10% of their routes as well, the really hard ones. And counterintuitively, if you can't do the last 10% of their routes, they may not adopt your solution at all. It isn't that they can't necessarily have route specific vehicles. So designing your system for 90% of their uses sometimes can result in kind of customer share that's significantly lower than 90%.
Right. So just trying to be steady versus scaling the best quickly as possible and also staying focused. That actually brings up an interesting point around right now, there is a huge amount of funding that is actually going into car companies, LiDAR, electric vehicles via the also very popular SPACs, special purpose acquisition companies that I'm sure many of our investors today have actually seen. And so all three of you have been investors or are currently investors. Ryan, you're previous like Kleiner Perkins, for those who don't know. And so from that perspective, when you're looking at your competitors, potentially some of them getting huge amounts of funding, the spigot's still free flowing even outside of SPACs, do you think that you should be raising as well, right?
That's an interesting question. I'm curious as to how Lila and Andrew think about that one as well. I think generally speaking, managers and investors feel that funding is a good thing. So if you're in a period where access to capital increases or cost of capital goes down or there are incentive programs, it seems to be a good thing on the surface, but I think everybody involved in this industry has seen the unintended consequences of that. So it is hard to know what the right amount of funding is for your business or your industry, but there's definitely a level that is too much. And all funding comes with an expectation of return and a required rate of return. So if you excessively capitalize an industry or a company, you are, without realizing it, you're green lighting every business plan that they have on the shelf, and that can cause real problems.
I'll just say though that the staging, again, businesses build pillars and then you hope that they're stacking up the next pillar so that they can keep stepping up the growth. And I think this is a great example. And Ryan has really done a great job, and now kind of passing the baton to Jack Allen, this idea of like the pillar of extraordinary partners to cities on their clean mobility solutions. And then opening up yet a next pocket. We've referred to Proterra Power because it is this ability to be a kind of a leverage platform to lots of other OEMs as like a tier one, and really expand the reach of this this technology base. And then there are more pillars. There's obviously energy services in cities, and I think that kind of layering, you can't do it all at once from the get-go. I actually think when there's too much capital, there's often a risk that you try to do everything at once. And I think this has actually been a really good case of kind of building these pillars of growth, and there's many more to come. And I think that's what gets us all excited, both in the recent financing rounds and then the story that this company will continue to tell for the next several decades.
Yeah, we'll love to hear your thoughts as well, Andrew.
Yeah, sure. I mean, I'll just add, those are all great points. And I guess I would say my general rule of thumb, and having been through it as an entrepreneur, through the boom and the bust of a couple of the .com boom and bust, and then the clean tech boom and bust, my rule of thumb is raise more than you think you need, and then act like you didn't. So and I think Ryan is right too, that's true to a point, and then you get to a certain point where you've just you've set expectations that are too great in the minds of your investors, or you've been talked into your business being something that it isn't, and that's left you in a bad position. And then you get into the zone where startups die of indigestion, not starvation. And I think there's a debate about that for sure. I've been involved in startups that have died of starvation too, but indigestion is often overlooked because people don't think about the pillars that Lila was describing. We really got to pace things carefully. Yeah,
that's great. And so other side about this, as you're scaling and thinking about pacing carefully, people is a really huge part of this. Ryan, you came in 2014, but you also, as Lila mentioned earlier, you handed off the baton to the new CEO. And so when you were thinking about this process and you were thinking, how am I going to do this? Well, let's start with this. Why did you do it?
Sure. I think you have to know what your specialty is, what you're world class at. And in my career as an investor and as an operator, I've tended to add the most value and have the most fun from that first dollar of revenue, probably to the first $100 million of revenue. The businesses, though, and the industries that we're disrupting are multi-billion in scale. And I think it can be wise to look within those industries for people who already know how those industries operate once you are at that mega scale. And so for me, once the technology was really proven out and market leadership had been firmly established, and now the question was how to go from being a North American battery electric bus OEM to a global technology tier one and work effectively with the companies that are already in the space. That I concluded that it made a lot more sense to hand the reins over to someone like the chairman of our board, Jack Allen, who's now our CEO, who had a career of experience already working in partnership with those companies and operating these types of businesses at multi-billion-dollar scale.
Great. So as we're talking also about future of Proterra, you've handed it off to build a business at scale. We're also at a really strange time, the big elephant in the room being the pandemic. So we still have the threat of those Chinese companies. BYD, for example, was recently invested in by Warren Buffett. At the same time, some of your core customers maybe are starting to feel the issues from the pandemic because of lower tax revenue. And so when you're looking forward and you're trying to strategize, what is Proterra going to do next? Are you thinking, what's your plan there? How are you thinking about dealing with the potential risks that come with that?
Well, I think early on in the pandemic, every business was tested, and we learned both on the supply chain side and on the customer side which portions of our industries were essential and which ones were potentially going to contract during the pandemic. I think the greatest pressure testing for Proterra was probably very early on when there was so much uncertainty. The reality is goods and people still have to move, and the transit bus systems are still operating. They have adopted pretty remarkable standard operating procedures in terms of cleaning buses, how fare collection systems, payment collection systems work, social distancing, passenger spacing. And then even within the factory environment, a lot of companies like Proterra have had to completely reinvent how they operate on a day-to-day basis to keep people safe. But there is no option for London or for New York or for Chicago or for many of our cities, large and small, to just park their transit fleets. A lot of essential workers have to get back and forth to their places of work using the transit system. So we saw some really incredible evolution during this summer. And then we've also seen pretty remarkable growth in e-commerce delivery. A lot of things that people were leaving their homes or apartments to get, they're now being delivered into their neighborhoods. And so the necessity for zero emission local delivery has never been higher. We've seen a lot of research that shows that poor air quality is actually linked to vulnerability to respiratory illnesses like COVID-19. So there's a lot of intensity around the largest fleets, not just on the bus side, but on the delivery side as well, wanting to implement zero emission. And so when Lila mentions the Proterra Powered business unit, that is the tier 1 business unit at Proterra that enables other vehicle manufacturers to take their existing factory capacity and vehicle designs and use Proterra's battery electric vehicle system and charging systems to develop and to manufacture their own electric vehicles, which are more essential than ever.
And are the two of you of the same opinion that kind of clean tech as it is somehow going to be accelerated by this pandemic? And if so, do you think that there are certain parts of the stack that are somehow going to get more attention than others? Let's start with Lila.
Yeah, I was just going to jump in to say that, moments of disruption are, have risks, but the opportunity side is to take a step back. Let's think about mobility solutions for cities. Let's not just be point source and replacing a diesel bus with an electric bus. That's not going to solve the magnitude of our transportation and pollution challenges. And so I think, again, like companies that have put thought leadership into their kind of technology distribution and merge those two are going to shape what does system positive look like for mobility across global cities. And obviously charging and leveraging battery technology, and then certainly addressing the social justice issues of access and again clean air for all. I think those are kind of the elements of what is really breakout to this moment in time. I think people are actually, again, aside the moment in specific time we're in this week and next week, this is no doubt going to have a lot of things that we didn't expect and a lot of things that maybe move faster than we thought. The quote that encapsulates what Ryan talked about that Vice President Gore often shares is from Rudy Dornbush. It's an economist who says things take longer than you think they'll take, and then they happen faster than you thought they could. And there's never been a more clear illustration of that in present day. So the big picture, like let's go systemic. Let's not do point solutions anymore is really critical. And I think the benefit, and Andrew referred to it, Brian referred to it. We've all been through .com boom bust, clean tech boom bust. These are people, and I'd just say there's a peer set in this industry, and also many who have many more decades than us collectively, who have learned some of the lessons from prior and are going to be really aware of not just chasing this is not chasing dreams right now. We're in like a practical application of like real, we've got cost down curves on our sides across industries that are making it a better total economic and holistic value proposition for cities in this instance to go electric. So Andrew, you can build on that, I'm sure.
Well, I was just another political leader, Lenin, said that there were decades where nothing happened, and then there were weeks where decades happened. And we often think of that in this last crazy period, but it's the same general concept. What I would say is it's hard to change people's minds, and it's hard to change people's buying decisions, even if you're like a city purchaser or you're choosing cereal for your family. It's really tough, especially when you're low in Maslow's hierarchy of needs. And those are the industries we care about, building systems, mobility, food, healthcare, et cetera. And thus these periods, as Lila was saying, like these periods of big change are actually great opportunities because they're so disruptive. It comes at a cost. It's painful in a lot of ways, but during those periods of disruption, I think a lot of people do stop and say, okay, I'm about to do something different because out of necessity, but maybe I should think as I do it differently, what are my choices, and actually give it some disciplined thought. And that's what we're seeing across the types of companies that we invest in. People are really opening their minds to a new, better way of doing things. If they've got to do something new, let's do the better choice. So we're seeing that for sure. I think there's all sorts of headwinds and tailwinds, and it'll come down to budget cycles and the way people think about investing. But the tailwinds are we're going to have, especially in Ryan's world, at least in the bus world, I think we're going to continue to see strong government support for building back in a different way. And those kinds of things become tailwinds, and they particularly help U.S. producers of products like this. So in that one specific case of the way cities might react here, I think we're going to see a building back in a very, very positive way. But then broadly, as Ryan said, when it comes to like zero emission last mile delivery, these are structural changes that we've been tracking for a while. And I know Generation tracks at a very structural level. And those are only being accelerated now. It's not because of COVID, but COVID is a cyclical accelerant to the structural change that's taking place.
Yeah, you've brought up a really interesting point as we're 1 week away from an election, which is clean tech has kind of been really quite politicized in a way. It's about climate change. That's a huge part of the mission. You have, though, on certain sides of the aisle, people who don't believe in it as an issue. And so, right, how do you bridge that? Have you seen resistance from regions that are, or governments that fly a little more red than blue?
Yeah. I mean, I'm gonna make my prediction, which is that I think next year will be the year that at least we start to see not the depoliticization of climate, but we start to see a true embrace from Republicans, many of whom have already embraced climate change as a concern and something that needs to be mitigated. But there is a large group who hasn't been able to step out and really be as positive as I think they want to be. So I think that there's a lot of silent support out there for mitigating some of the some aspects of the crisis that we're dealing with. And I think that's only going to grow once there's a lot more permission from leadership in the White House to think carefully about that.
Yeah, I generally agree. I actually think at the local level and at the fleet level where these decisions are actually made, I just don't think there's nearly as much disagreement as at kind of the sort of cable news level discourse on climate. And we're in just an incredibly tense moment this week, and I think we'll be on the other side of it one way or the other next week. But from what we've seen is we've yet to run into a city that wants to subject its population to diesel air pollution. They're looking for solutions that work, that save them money, that protect their local environment.
I think this intersect of climate and health is now recognized, and I think it actually is one of the steps to make it less political. I'm involved with the Mailman School for Public Health at Columbia University, who've been doing a ton of work on, air pollution in cities and the importance of clean transit, among many other topics. And I do think the way we frame it also is around sustainability trends and how our industry is being disrupted. Do you want to invest in, the future industry or past? And I think if we all kind of start to look towards future, and I think what we try to put out is how these disruptions are taking place in mobility, in healthcare, in built environment, in, the ag and food and so on. It's public domain and people can download it from our website. It actually moves us, I think, a step out of kind of like the naming and the bucketing and the politicizing to broad sweeping, where's economic opportunity being created? And let's think about what is technology enabling us to do that we weren't able to do before. And let's put it in complement to the health and human, not just climate imperative. And we just have to keep twinning those back and back together. I think that is the only way forward.
Great. Just a reminder to our audience, we will be taking questions in about 10 minutes or so, and we will be taking them in as they come in. So be sure to let us know via chat. Before I turn more to talking a little about kind of how Proterra got here as well, as we're still on this theme of what happens next, and as we play a little of this prognostication game, how many years, and I want to ask this of each of you, so this will be a quick question, how many years until Proterra replaces every single bus in America? Will it replace every single bus in America?
Well, I probably shouldn't publicly advocate for a monopoly. That'll get me in trouble. So let's say zero emission vehicle systems. I think on the bus side, it really comes down to the replacement cycle. Buses are at a 12 to 15 year life. I do think we're within a single digit number of years from someone making the decision to purchase a brand new bus that runs on anything other than a zero emission system. And then at that point, you have to get creative. Do you do a cash for clunkers program? Do you reclaim or give a credit for an old bus? I mean, I think we've all, unfortunately, been a pedestrian or a cyclist or in a vehicle behind some of the oldest buses and trucks on the road, and they are the absolute worst. So from a local public health perspective, there's probably a good case to be made to get rid of them. But I think, if you look at some of the state markets like California, their blueprint is pretty well laid out for a lot of different vehicle categories. So over the next 10 to 20 years, most of these major surface categories go zero emission, and that can be EV or hydrogen. I tend to think that for the regional solutions that don't necessarily have to do kind of long haul drives, I think it'll probably be a battery electric vehicle solution. But I don't rule out that hydrogen could play an important role in long range applications.
What he said, and I was going to use the California example as well, because California often leads the way other states and often eventually the rest of the country goes. So we're seeing mandates coming from our governor to remove all or to stop the selling of anything but electric vehicles on the road. But this question reminds me a little bit of the question about when I was working in renewables, when will we have 100% renewable power? And it is that replacement cycle is very, very important to watch. And really the more appropriate, or at least more immediately fair question is, when will we have 100% of new purchases? And in that case, it was new power plants being built, be only renewable. And that, happens much faster than people would think, or to take the quote earlier, sort of like, it looks like it's going to take a really long time, and then all of a sudden it doesn't after a long time. So we're in that zone right now with vehicles, and we think that you're going to see California stick to their guns, and then you're going to see other states realize this is not that difficult, with the exception of a few things like long haul trucking, and then be able to follow suit very, very quickly. And that's going to be and I think that's sort of summed up in a lot of the excitement within the stock market around the publicly accessible stocks of electric vehicle companies.
Yeah, and just this, without giving the specific prediction, I think it's in the next 5 years, half of global bus fleet will be electric, much of that in China. So again, China is a force for good here with respect to accessible, clean technology. Again, may not fit the needs of certain customer base that Proterra will go after, but it will be part of the solution, absolutely. And, pockets of the market, like in the Nordics with plug-in EVs now at over 50% penetration. We have an example of a company called Gogoro in Taiwan that's got double-digit share of, the two-wheeler market. There are just a handful of these. And if you go back to look at some of the scenarios in the IEA recent kind of energy outlook, in the scenario in particular around net zero case, which in our view is the only feasible case, the order of magnitude moving from an average of 2.5% of car fleet electric to 50% plus by 2030. These are massive shifts. And then you hope that actually there's competition, and then you actually hope that there's a set of leaders, but that it enables a whole fleet of new business models, software companies. Obviously telematics plays a really key role here. Congestion management, parking, just the excitement that comes with the knock-on effects or the second-order effects of a transition like this, which creates economic opportunity, and certainly you hope that competition jumps right in there to improve upon where we are today.
The hope being that more competition, you'll have more technology, it sounds like.
Yeah, and just things you might not have even thought about. Like we're talking about still, a vehicle. I mean, Ryan has referred to services. I mean, again, energy management services are a big piece of the puzzle. There's then, the renewables piece in energy management. If you start to peel the onion, this is not one singular, point solution. This is actually a magnitude of solutions that can be brought into how we live in modern cities.
Yeah. So while we have the two investors, I do want to ask Ryan, before we also head into Q&A from the audience, which we're getting quite a few of. So when you're looking back in your funding cycle for Proterra, as you're thinking about when you were raising money, when you decided to raise money and why, and the question is, when you look back on that and you think about what kind of capital to take, who to take capital from, right? How did you decide when it was right to start taking funding from, say, BMWI versus taking funding from more traditional venture players, or companies that were very much focused on clean tech, as was Generation and Obvious?
Well, I think when you first start out, you're doing a lot of technology development and team building, and so you're going to focus your fundraising efforts on partners that can help you with building out that aspect of the business. I think as you grow and you get more mature, you're more focused on partnerships that can accelerate demand. And so I think the Daimler investment and strategic partnership that we executed with support from Lila and her team at Generation, that I think was a classic example of shifting from needing support on early stage technologies to looking to form global partnerships and product partnerships so that we really can go faster. I'm a big proponent of alliances and partnerships within these classic industries because we need to change them faster. And clean tech gets associated with capital intensity. That capital intensity can be significantly reduced if you partner with someone who already fully depreciated that capital 40, 50 years ago. And so a great example of that is we have a school bus and a delivery truck partnership with Daimler, but we are using our battery technology and we are working with them to integrate our battery pack technology into vehicles that they already build at existing factories. So Proterra didn't need to raise the capital to build a brand new bus factory or a brand new truck factory to enter those two markets. It needed to find a smart and creative partner that already had access to those markets and had service networks in place.
Great. So I will go ahead and switch over to a few audience questions as well. The first question that we had coming in very early on was I should first start with, it's focused on our two investors here. So as early investors, how did you think about the capital stack needed for Proterra and venture level returns and opportunity, especially in markets working with public transportation and infrastructure?
I'll go first, Lila. So I guess I would say two things. One when we look at these structural changes taking shape in a given economy, even if it's an early stage of the ramp, because we believe you're seeing a wholesale transformation across an industry, it is a leap of faith for us, but I think a measured or at least studied belief that the investors are going to be there with us for those later stages because the entire industry is going through the change. We also look at who else is around the table with us in those early days, and we were really excited about who we saw around the table with Ryan and the team. So that's point one. And then point two, on the sort of investing in infrastructure dependent businesses, or maybe government contract dependent businesses, the piece that I would put out there is that there's a real difference between being able to build and sell units of one thing over and over again versus being able, selling something that is a massive infrastructure project. And for us, we would probably draw a line there in a lot of cases. We've seen pitches for electric maglev train systems, or Hyperloop like tunnel systems, and other things that are just big project oriented businesses, or even types of power, landfill methane power plants. And while those are exciting, I don't believe, for us, they don't have as many of the venture characteristics that we would look for in terms of proving unit economics and then scaling them. Instead, you're taking long-term project risk before you can really see the ultimate outcome. So that's a little bit of a differentiation, at least in the sort of pathway to relying on government as a customer.
Yeah, and I do think this is a good case study of kind of like bringing along pieces of the capital markets in tandem with the company's stage and what they next need to achieve. So you've got venture, you've got venture, you've got growth, you've got crossover, you've got the strategics, and this company, and I give a lot of credit to Ryan. And when we came in, we had a board seat, and we brought in Jack Allen, who's the former COO of Navistar, who's now the CEO, and he was asked to be chairman. He became CEO. Like, that's a journey where this company never was. I don't believe this company was sitting there claiming that they could, be an just like overnight success. Like, this was a real company that understood reality, that there are gross margins you need to hit. It takes a long time to get the specification right. The licensing platform and what it takes to be a sophisticated tier one is different from being a disruptive engineering company. I think Ryan's always talked about like what shift had to take place culturally to achieve that. Like, it probably matched the right set of growth stages with the capital expectations. And I think that's hard to do. So maybe this is a good part of the case study to tease out. It's just like at which point they brought in, the strategic, at which point they brought in the crossover folks, and obviously as they evolve in continuing to make sure that the investors have the right alignment. Like, let's make sure people have the right expectations and understanding of timeline to success.
That's a great question. Thank you. Following up on that, actually, so the other side to this is, I do want to kind of mention one that probably a lot of clean tech investors do know about at this point. Nikola is a electric car company that went public via SPAC recently, but has been under the limelight, not the right kind, for potential fraud. And so, as investors, when you're looking at some of these companies that are early on, that have technologies potentially that aren't completely proven yet, what are your red flags? What do you say, that's not a company that I want to be a part of?
Well, I mean, I think that having the wherewithal, either within your own shop or through a network of advisors and contacts within an industry, to do the diligence and do your homework, particularly on the technology and on the team, is really critical. So if we don't feel like we can get our own heads from our own experience around it, or have the right resources to better understand what we're getting into, when we see flags that we can't really push past or investigate, we would probably back off. So that's sort of a broad statement. But with this company, what we saw was a extraordinary early stage team, and a team that was continually trying to find ways to sort of upgrade itself and really humble about what it was going to take to go the distance. So that's especially at the early stage, that's sort of the foundation. Does the team have the openness? Do they have the abilities themselves? And then the ability to recognize that in the future, they're going to have to grow and change individually or as they assemble the team. So anything that flies sort of in the face of that or flies in the face of sort of technologically unbelievable without our ability to validate from a third party, those are usually things that we would work to avoid.
And where we sit, again, we're not venture, it's really growth or expansion stage. There have to be historical, numbers and track record to validate. So there's a bit more evidence if you think about it that way. Of course, our return expectations are different than a venture capitalist. Like we're at a stage later such that you're underpinning a growth plan with your market understanding. Again, we use roadmaps to inform that for ourselves, but it's this effectively where in the value chain we want to play. What are the defensibilities of margin structure? What are the competitive advantage features, that business model? And like, what are the proof points to say that is true? Or what are the one or two things you have to believe that haven't yet been totally proven, but you've actually kind of like eliminated, a set of the other key risks. And so there's a calibration. There's still, room for error in that. But I would say, again, history is helpful and benefit of years of repetition and just reviewing lots of companies and making sure that when you make a misstep, you take the learning and you try not to repeat that same mistake.
Yeah, can I just add one more thing, Lucinda? I would say to the entrepreneurs out there, again, especially at the early stage, but I'm sure this would work for the later growth stage folks as well. Increasingly, we are seeing entrepreneurs be much more forward and open about their values, the values of the company and the mission that they see themselves on. And I think sharing that really openly and upfront can have an incredible impact on the investors, regardless of what lens they're using. If they're fintech investors or they're deep tech investors, whatever, if you explain if you can show genuinely what you are trying to do and why you're trying to do it and who you really are as people, that's going to go a long way to accelerating that bridge of trust, which is just so hard to build in the pitching process, but I think cements real connection to investors. And everybody's human, so being who you are and showing them who you are, I think will have real value.
Great. And our next question is also from the audience. So how was the transition, and this is for you, Ryan, how was the transition from being an investor in Proterra to becoming the CEO? And now transitioning from CEO to chairman of the board, are there any learnings that you want to share with the audience of founders?
Yeah, the first thing I'd say is the transition wasn't necessarily as binary as one would think, in that if you are working with technology companies as an investor, or if you're working in a technology company with your investors, you're kind of on both sides of the table fairly often. So I started my EV career at Tesla, and I was there very early on and worked quite closely with a lot of our investors there, and EIRs and operating partners who they sent in to help. And so when I left Tesla and joined Kleiner, it was fairly common occurrence for me to get involved in an operational role to help a company scale through a particularly high point of growth or through a challenging period. So the way that I guess I practiced venture wasn't necessarily it wasn't necessarily kind of behind the desk and completely analytical. I was often involved with companies like Proterra, so I knew Proterra quite well and had been on the board before being asked to take the CEO role for the next chapter. So it really I think it's a question for all of us if we're in this space as entrepreneurs or investors. You just have to ask yourself at any given point in time in your career and opportunity set, where are you going to have the most impact? Where can you grow the most? Where can you learn the most? Where can you help out the most? So I think it's increasingly common for people to spend time on both sides of the aisle, if you will.
Great. We also have another question. There is a lot of hype about hydrogen for heavy-duty vehicle fleets. How do you think competition between these two frameworks will play out as we approach 2030, 2035? And maybe, yeah, let's start with Andrew. You're already way ahead.
Yeah, I mean, look, I just, I'm going to say when it comes to mobility or transportation on the ground, I'm not really a fan, only because I believe that the strength of the electrification movement is still has not really reached its full maturity and potential. And I think we're going to see battery electric vehicles continue to thrive. It reminds me a little bit in the solar industry of what happened with crystalline solar as a technology versus thin film and a lot of other exotic types of solutions. Some of those solutions were technically in a lab actually superior, but the scale of what was happening with polycrystalline and the silicon suppliers and the entire supply chain system behind it was so massive that it just blew everyone else away. And I think lithium ion is having that same moment where the broad family of lithium ion based batteries is so profound in its scale, not in its perfection or in its scientific superiority, but just in its scale, that it is going to surprise people with how low cost it can get, what we can do with fast charging and other solutions. So I don't really think there's going to be a massive competition there. I think that oil majors have some advantages in sort of focusing on hydrogen, and that might be part of that machine that's getting people interested. I do think there are some specific examples like long-haul air transportation and possibly long-haul shipping where hydrogen could have a real role to play as a stored fuel. But beyond that, on the ground, I personally am not excited about its future.
What about
Yeah,
you, Lila?
I
don't have a ton to add. I think that's well said.
Great.
I was just going to say all infrastructure is hard. And even if infrastructure is a 110 volt extension cord, it's hard. It takes coordination. I also tend to believe the simplest answer is the correct answer. And so we have a lot of markets now, whether it's the taxi market, the scooter market like Gogoro that Lila mentioned, the bus market, short haul aviation, local delivery, all of those things can be done in a more simpler, faster, cheaper way with electric. And at the end of the day, hydrogen is a way to store energy. There's no free hydrogen. You have to take energy and you have to make hydrogen. And so I don't rule it out. I mean, there's too much fossil fuel energy that has to be displaced to completely rule out a solution like that. But when you look at where batteries are going, where they've come just in the last 5 years, it's pretty staggering to try to get in front of that curve. It's exactly as Andrew mentioned in terms of what happened with solar. So even if you have a business plan on your desk now for a hydrogen fuel cell, by the time you de-risk that product and set up a high quality replicable supply chain and you're a couple years down the road, you have to plot forward on where batteries will be in cycles, cost, energy density, fast charge capability, and you're chasing a very steep curve right now.
Great. We have another one kind of in the same realm. How should investors think about carbon pricing beyond just tailwind in a commodity industry? And add to that, do you think early carbon prices that might come forward will be binding to heavy duty transport?
I mean, I think maybe Ryan, you can talk about how you think about it in light of Proterra, but what would be efficient is to put a price on carbon. So, that is, people should be thinking through that. And there are obviously markets that exist where that happens today. There's also, as many have seen, these massive commitments for net zero pledges amongst some of the biggest corporates globally. We're going to see a lot of people motivated and businesses motivated to deliver a net zero future. So, if more kind of like if as entrepreneurs you're not thinking about it, or as investors this is not intersecting with your sector analysis, I think probably you're missing a beat or two. Whether it's regulated, voluntary, all the puts and takes, these are critical industries where policy will play a role, already does play a role in, subsidy or support, but also traditional energy has massive subsidy and support too, right? So this is going to be part of a patchwork, and I think, I can't predict the future vis-a-vis the heavy industrial mobility market. So maybe Ryan, you can add in there.
Well, it's exactly as Lila said. Without pricing on carbon, the market's quite inefficient, and over time there will be more and more pressure to enable markets to be more efficient, and frankly to fund the type of infrastructure that taxpayers and communities want to see. So I think when you're talking about the heavy duty sector has more of a community impact than the light duty sector. And so I think it's much more likely that you see communities band together, take political action, and maybe it'll be a price on carbon, or maybe it'll be a price on a specific criteria pollutant. We already see a very successful price on carbon as I'd say kind of as a proxy with the low carbon fuel standard in California, and that has moved the needle. That has enabled fleets to move a little bit faster in converting away from fossil fuel toward EV that's powered by a very clean grid. And ultimately that's what carbon pricing is going to do. I don't think it's going to answer the question yes, no, as to whether or not we get to clean energy, but it is going to be a pacing question. And I hope that we can have smart, rational policy, because there's a massive amount of good that is created by pulling these markets in, or just in having the markets be efficient. Take the subsidies away from the dirtiest fuels and shift them towards the cleanest fuels that have the least environmental or health impact.
Great. So we have a question. Is there hesitancy at the public transportation agency level to take on a large scale capital investment like an e-bus, or versus the safer ICE option? I'm not familiar, but I'm guessing this is something that you are. Even over the lifespan, does it become cheaper?
Sure, and I think that what the question meant by ICE was internal combustion engine. So they're which normally is a diesel engine or a natural gas engine in this market. It's a great question. It cuts both ways now, though, in that that you can see the end of the road for heavy duty diesel in a lot of these markets. The community pressure, the health pressure, the cost per mile, the spare parts cost, electric's already winning. And as Lila mentioned, in markets like China, they've already proven out that they're sunsetting diesel buses and trucks entirely, or gasoline-powered taxi cabs, diesel-powered taxi cabs. So high mileage, fleet-based solutions, those are going away. So actually, there's a lot of risk in sticking with the status quo, because you may not be able to get spare parts. You may not be able to maintain a fleet of trained mechanics. The workforce is transitioning. But in terms of helping cities manage the risk of the new, I think smart companies like Proterra have introduced things like battery leasing programs, where the customer doesn't have to buy a battery. They can just sign a service agreement. And I believe Gogoro does a similar thing for batteries for scooters. So you give them what they want is transportation. They want mobility. They want the service. They don't necessarily need to have a battery on their balance sheet.
Great. So one short question, since we're pretty much at the end of our time. When you look back, and this is also from an audience question, but when you look back on Proterra and as it grew, surely there were scaling issues. There were probably mistakes as well, even though you've gotten to this level of scale and success. So when you look at the company, what do you think what is the one thing, if you could come up with it, you wish you could have done differently? And also what could have potentially helped you scale faster?
I think technology companies emphasize engineering, and for all the right reasons. But we spend so much time focused on engineering and design. I guess if I would do it all over again, I would hire, or I would make sure for every brilliant engineer that we hired a similarly brilliant supply chain manager.
Awesome. That was fabulous. Thank you so much for sticking in time. Thank you. Well, thank you to all of our panelists. It was such a pleasure to hear. Thank you, Lila. Thank you, Andrew, as well as Ryan. We are now at the end of the panel, and thank you so much to our audience for all your brilliant questions.